Welcome back, everybody. My name is Pritesh here with Kaizen Crypto, bringing you another video. Thank you all so much for joining me here today. I hope you all are doing well. In this video, it's my conversation with DC, the co-founder of Liqwid Finance. I learned so much from this conversation. We talked about all sorts of things from DeFi on Cardano, smart contracts, stable coins. We talked about Atala Prism. We talked about Project Catalyst. I learned so many amazing things from this conversation. So I really do hope that you enjoy it. If you do, please be sure to drop a like and don't forget to hit that subscribe button. It really does help support our channel. So I hope you're able to find some value from this video. Let's go ahead and jump right in. Welcome back, everybody. Thank you so much for joining me here today. I'm really honored to have the privilege of speaking with DC, the co-founder of Liqwid Finance. So DC, thanks so much for joining us today, man. How are you doing?
Great, Pritesh. Thanks for having me on. I really appreciate it. Like I said earlier, really appreciate everything you do for the community outside of running your awesome stake pools, just creating great content that's curated for users who might be stepping into crypto for the first time. I can't tell you how often I speak to people like that every day from just, my day job and friends and family who are just stepping in. And it's nice to be able to share them a YouTuber who I know is going to have content that they can actually learn a lot about the community and beyond just token go up, token go down, or, this is how you can stake. Those things are, also important and have merit, but I think what you're doing is great. And I just want to kind of, set the scene with that.
Hey, man, that means a lot, especially coming from you. I've been keeping up with all your progress as well. So I'm just really glad to have the opportunity to chat with you today. But I appreciate the kind words and, just to get things started, just to get right into it. I guess, could you tell us a little bit about yourself and, just give us an introduction to how you came to co-found Liqwid Protocol?
Yeah, absolutely. Myself, I have a background in consulting. Software implementation is really where I've found the last 3 years, the most of my time being applied. Before that, I went to business school in England. That's 2017 timeline is really when I started to go down that crypto rabbit hole. Studying finance at that time, thought I was going to be an investment banker or consultant, didn't really know, trying to kind of like navigate that path. As someone who was really interested and keen in jumping into finance, didn't even have a, blockchain technology based background at all. But just over the course of, living in England for a year, being exposed to, a different set of people, a community that I think was much more accepting of like blockchain and new technologies, even AI and things like that they were pushing over there. It really kind of opened my mind up to one, there's this thing called Bitcoin and just the ability to push value anywhere, but the programmability that you got with Ethereum, and that was really starting to take off around ICO mania. And there was other things being built. MakerDAO had been built. Compound was just launching around this time. Like, to me, that represented, and specifically smart contracts and DAOs and oracles and these things that we're using today, like that represents the next wave of what we're going to build startups, what we're going to build, the future of fintech based on. So it was great to just see that kind of happening already back in 2017. And like I said, I'm just a business school student, like, paper trading Tesla stock. I didn't really know too much about like, the way markets are constructed, the way market makers and takers operate and kind of allow these marketplaces to function, and kind of what was being built, in the Uniswap, constant function market makers and the Aave compound lending borrowing systems at the time. But, once I, kind of went through that process, got my degree, started consulting work, is really when I was able to say, there's a set of traditional finance products and exchange products, fixed income, these type of things, lending as well. You look at money markets today and the way they operate, they're all being rebuilt on DeFi right now in front of us, on not just Ethereum, but at this point, Solana, Binance Smart Chain. There's many other blockchains that have kind of entered the DeFi conversation. And, Cardano is right around the corner from doing the exact same thing. And I think a really meaningful way where you tie identity into these financial transactions and financial protocols, then you're saying, okay, I can actually own this data that I'm just generating. I'm no longer just doing it as a 0x address. And to me, that was like, okay, you've just combined not only just the traditional finance products with zero overhead from these institutions and no intermediaries on a public blockchain, but you've also recreated a system of identity, and credit is going to spur from that. And there's countries around the world. Our co-founder, Josh Akpan, is from Nigeria. He's from Port Harcourt. And there's places in West Africa today where it's actually really hard to, one, secure the equivalent of like, a normal loan to get an auto or to get a mortgage, and to have the identity and the system that you need to actually even open a bank account to register and secure that loan, it's very difficult in some of these regions and some of these places, not even that far away from Nigeria, really. And West Africa in general seems like the place that's going to adopt a digital identity system the fastest. I know that IOHK is doing a ton of work in Ethiopia. New government partnership just announced 5 million users and professors and students all being onboarded onto this digital identity platform. But I really do feel like West Africa is probably going to be a place where these solutions can take off a little faster, just due to the one scale of Nigeria's economy, two, just the actual need for these things now. 95% of the transactions in Nigeria are still cash-based, but the youth in that country are definitely onboarding onto the digital money and the wave of digital finance. And right now it's still being done in a Web 2 frame. It's still, I'm trusting a third-party intermediary to borrow some money at usually a very high APR that has these fees built into it, has default trips and traps built into the system, essentially, to build what we call really like a debt spiral for some of these early borrowers who say, they fall in prey to these zero collateral loans, and that's the best option you have at that point to access capital. There are no other tools. There is no, compounder Aave. They haven't exactly reached the corners of these, countries and nations that Cardano hopes to touch, in the next couple months to years, right? So that's kind of what our eyes have always been set on. It's always been reproducing some of these financial protocols and the products that you see in terms of lending, but also tying identity into it in a way that Cardano does so natively with Prism. I think that's just that's really kind of the purpose and the drive and vision behind Liqwid.
I gotcha. So what you're doing is you're taking a look at the problems we see with traditional finance, and then also how that incorporates with blockchain and some of the issues we've seen with previous generations, like with Ethereum. And then you're using solutions such as Atala Prism with identity to really create this all-encompassing DeFi solution. So I wanted to even get into that with you as well, and talk about some of the technical details on how that's all going to look. So could you tell us a little bit about the progress that you guys are making? Because I know right now we have the Alonzo test nets. We've got the blue, the white, purple, all that kind of stuff, the different phases with that. So as far as building a protocol like Liqwid, I mean, what is the scope of work for you essentially to build something like this?
It's a great question. Yeah, there's always like the vision, and there's always like the future state that the founder, the protocol architect, wants to see implemented. And then there's like the daily progress being made by the devs and the contracts being built, and kind of the modules that this thing is being rolled out in, and how that's going to look for the end user. So great question. So yeah, right now we're at the stage of being ready to almost release some contracts to a public testnet. And those contracts will just be supplying to the protocol, redeeming your supply from the protocol. So withdrawing, borrowing some asset once you've supplied and collateralized the position, then repaying that loan, right? So those kind of base contracts, as well as like liquidation and some governance things tied into LQ as a token. So distributing LQ, using LQ to vote on different proposals and different smart contract parameter changes, updates to the system. This type of thing that's kind of tied to governance. Those contracts will be deployed to, I'm guessing, Alonzo, maybe white 2.0 or Alonzo purple level testnet. And we're hoping that happens, as soon as possible, sometime in July, late July, early August, the latest, I would assume, for that. But the devs are making great progress on that. I think one of the last major hurdles for what we're shipping in V1 is really just a money market protocol that looks a lot and feels a lot like a compound or an Aave. There's no Atala Prism tied into this system yet. There's no identity notion. It's simply borrowers have Cardano addresses, suppliers have Cardano addresses and ADA or some other native token on Cardano. They supply those tokens. They mint a token that represents their balance, so a tokenized representation of balance plus interest. In our system, we call those Q tokens. In Compound, they call them C tokens. In Aave, they call them A tokens. The point is that you can tokenize the user's balance upon that initial supply, and then accrue interest to that balance as a proportion of the amount of the pool share that they own, basically that percentage share. So yeah, that's going to be like the main V1 protocol product and service that we're shipping. obviously once a user supplies some assets, another user can come along, collateralize the position and borrow those tokens. This can all be done today on chain. It's done on Ethereum. It's done on Cosmos. There's no identity tied into it. But what you can do when you actually include something like Atala Prism, and we kind of, we started talking about this earlier, is you take these transactions to the next level. You take the ID, the metadata, the context of that transaction, and you tie it to an actual user who maybe has some transactions before, or maybe is their first time, actually opening up a loan in Liqwid or some other system. But either way, now this transaction becomes a part of their actual financial history that they can, sell on a marketplace by having some form of a credit score that allows them to, sell a piece of their data, say on a data marketplace. They could also maybe actually get better terms on their next loan or in a different DeFi protocol because they're now deemed a high creditworthy borrower in the system of, Cardano DeFi. If it's owned by an Atala Prism, you could also see in the future, Cardano and IOHK talks about RealFi. We're talking about users taking data that they generate on chain and own within their digital identity wallet, Atala Prism, and potentially using Liqwid loan data to secure their first mortgage in, the real world. And that to me is like, you've reached the ultimate level of DeFi interacting with the traditional finance world in a very meaningful way, right? We don't need these intermediaries. There's no need for a bank in that process anymore. The user simply is producing data on chain and using a layer 2 system like Atala Prism to kind of store, own, interact with modules that can score that data based on their transaction hash and ID, right? Based on the metadata tied to that, based on just basic data points too. Like we're talking about how much they borrowed. We're talking about the volatility of that asset, the interest repaid, were they liquidated or not, their collateral ratio at any given time. Like these type of things. And we're working with, companies today that actually have existing products in the ML and kind of algorithmic space of credit scoring, and just taking and reading these data points to create continuous credit scores could allow us to do some really powerful things in terms of incentivizing users to actually have very healthy borrow history. We can use our governance token to do that, right? Meaning you can set up a system where the highest borrowing users, so the users with the outstanding highest credit scores, let's say in America, we have FICO, up to 800. Those users are pro rata earning the most in terms of governance tokens that they can claim in the system every epoch or so, because of only the fact that they have the healthiest loan positions out of every other borrowing user in the system. So yeah, that's kind of, that's something that we're looking to put together here in the next, couple months here before Liqwid V1 goes live, and include it actually in the, mainnet V1 product when Plutus is live. These things are coming together rapidly. And like I said, the Oracle mechanism is something that was a big obstacle. And I feel like we have a really decentralized mechanism to make this work on chain in a way that the price feeds are actually verifiable on chain, which is huge. It allows us to take a Coinbase or a Binance API essentially and use that to update our price feed Oracle. This is something that will open source. This is a piece that other protocols will be able to use and run with on Cardano. This is very much a problem that every other DeFi and protocol that's operating based on pricing assets at different times is trying to solve and face. So it's very much a communal and collective and collaborative environment when it comes to trying to solve these things. So yeah, we're looking forward to the testnet and deploying these things and making a lot of it open source pretty soon.
That's really cool. That's really cool. So you guys are thinking about a lot of moving parts, whether it's identity, bringing in price data feeds via oracles into the smart contracts. So a lot of moving parts here. So I wanted to just go ahead and touch on a few of those key points. So talking about oracles, so I recently saw on your Twitter, just keeping up to date with all the updates, you had put out a diagram about this oracle and how this would essentially feed data into the smart contract. So one of the projects that I'm really interested in is Ergo. And I know you guys do have some really cool, innovative ideas that you're also borrowing from Ergo. So as far as oracles and being able to bring in price data feeds into these smart contracts, I guess what would be the benefit of using something like an Oracle pool, or you had even mentioned with Coinbase, so I'm assuming it's like the Rosetta API from Coinbase. So like, what does that look like?
Yeah, great question. I mean, I think Oracle pools are awesome. I love a lot of the things I see from Ergo, Alex Sherpanoy, Kushti, he's awesome leader. I think they have a very strong community. But the thing is, Ergo's extended UTXO is right here. And Cardano's extended UTXO is like a very different implementation of the system. And there's certain things that Ergo just has that Cardano either won't have at mainnet launch. And when you talk to the Cardano core developers in terms of Plutus, there's design decisions. These aren't bugs. These are design choices for them. So they're not going to change in the near future is what that kind of signals to our team at least. So you talked about Oracle pools, right? That's built on that read-only accounting mechanism that's possible in Ergo's implementation of UTXO, but not at all in Cardano's version of it, right? Cardano has something called redeemer values. And if you look at that, that UTXO Oracle design diagram that we posted on Twitter, you can kind of see the redeemer value basically being updated to then update the entire Oracle contract itself. But essentially, we're trying to mimic what the Oracle pool read-only accounting mechanism is doing in terms of creating a UTXO that you don't need to spend into, but can come to consensus and update every so often, and then be able to kind of have that as the new state for some time until it's updated again in the future, right? We have this redeemer value in Plutus that you try to basically use to recreate a very similar instance of that, but it's not the same, right? Because you still have to figure out the UTXO spending into problem. So yeah, there's things like that. Like it would be really nice and cool to just be like, oh, we're going to have Oracle pools and take that. But instead, these are things that you actually have to build the first time when you're the first one, you know, when you're the first wave, and make sure that they're hardened and robust and secure and decentralized on day one. And that's something that we think we'll get. We're talking about using time-weighted average price for our Oracle mechanism. So basically, if the price of an asset that we're getting from Coinbase or Binance fluctuates some threshold, let's say 1% from the last time that we took the price or the price was updated, you can fall back onto the last time to ensure that if that market is somehow being manipulated on Coinbase, that you're not falling prey to that essentially. Also, there's things you can do in terms of volume weighted average price. So if the volume of the ADA market is much higher on Binance than it is on like Coinbase or, you know, one of these other exchanges, Kraken, we can take the weighted price of the Binance market compared to Kraken, Coinbase, and other exchanges, and ensure that, okay, an attacker from an economic standpoint would have to manipulate the Binance market so much, you know, for it to actually be able to reflect in the price change that's now being taken on our Oracle. Because we're, you know, it's easier to update a, you know, or manipulate a market that has much less volume than it would be from an economic attacking standpoint to manipulate a market that has, say, significantly more volume than the ADA market on Liqwid. That's what happened with Compound. We saw that in, I think, late January, February. The attacker was able to manipulate the price of DAI on Coinbase and spike the price of DAI, was able to liquidate something over like $90 million of loans on Compound, because all of a sudden your borrowed asset, which you think is a stable coin that should stay, you know, stable, is now spiked, and now you owe the system a ton, and your position is actually liquidatable. So yeah, not good.
Yeah, definitely not good. I mean, you guys are thinking about all these types of things. So I wanted to also get into as far as being able to actually use the Liqwid protocol and supply liquidity. So we're talking about the LQ token. So that's like this native token that's for use specifically for Liqwid protocol. But then you also talked about Q tokens. So I just wanted to kind of pick your brain and figure out exactly from a user standpoint. So when you go to use the Liqwid protocol, let's say, for instance, I'm a user who wants to borrow capital against my ADA. So a question that I got was, would you actually have to send your ADA to a smart contract in order to supply liquidity, or would it remain staked to a pool? Let's say if you have it delegated from your wallet. So what does the process look like with that from a user standpoint?
Yeah, great. We're getting back to the basics, right? So you don't even need to really think about LQ, because LQ is a governance token, but you don't actually need it to interact with the protocol in any way or use the service of, you know, supplying or borrowing essentially, right? So Q tokens are really the main product of the protocol. Q tokens are minted every time someone comes and supplies assets to the system, right? So if I come along with ADA and I supply to the ADA market, I mint Q ADA. If I come along with some AGIX and I supply to the AGIX market, I mint Q AGIX. All of that single transaction of me both supplying and minting Q tokens is one-for-one tokenizing the amount that I've supplied into the protocol's backend accounting, which takes Q tokens and says, okay, this can now have a exchange rate to the underlying asset. So QAGIX to AGIX. And actually, as borrower interest is accrued to the protocol, and as interest is repaid from borrowers on outstanding loans, that's actually how the exchange rate from that underlying asset to that Q token that you're now holding because you've supplied to the system increases. So you never actually, from the time you mint Q tokens to the time you come back in the future to redeem your underlying asset, AGIX, ADA, whatever it was, you never receive more Q tokens. It's only a one-time mint event. What happens is, according to the time value of money and essentially how much interest is repaid and accrued in that market, the exchange rate will increase so much that you'll have the ability to redeem more underlying assets than you initially supplied to the protocol. And that's kind of how the system works from a cash flow perspective. Q tokens are used to basically tokenize that user's balance. And then essentially we're saying their supplied assets are now available to be borrowed from any other user who comes along and first collateralizes, so supplies to the protocol, and now has some collateral factor determined by the asset that they supplied and can now borrow. So ADA, for example, being a very liquid token, has a collateral factor of around 75%, right? Meaning for every $100 I put up in ADA, I can borrow $75 of any other asset in the protocol, essentially, right? That is what we mean by a collateral factor tied to the supplied asset. It can be different for AGIX. It could be 50% collateral factor, right? Because AGIX might not be as liquid as ADA. You might have to deal with volatility issues with the token that's less liquid, right? So now you're saying to secure the system and to have basically a less risky collateral asset in the markets, you're going to make that user have to put up more collateral to borrow the same amount of another asset that they could if they had used ADA as collateral, essentially. And that's how the system works. All those parameters are configurable through governance tied to the LQ token. So LQ token holders introduce proposals. In fact, we're working on the forum website like right now and about to go live with that in the next couple of days. So as soon as the protocol goes live, we could have true on-chain proposals being introduced, grant system live, these type of things that are actually going to allow the system to really kind of take off into the future and allow the users to have a meaningful voice in the product. But yeah, this is kind of the mechanism, right? So I hope that you also said something a little interesting. You said if I wanted to borrow ADA, would I have my ADA still staking in my staking pool, right? And I want to answer that clearly if I can. So the way the system works, right, we know that you can either be a supplier or you can be a supplier and a borrower, but you can never just be a borrower in the system, right? Meaning when I supply some amount, yes, that ADA is now sitting in the protocol and can be pointed towards the community pool that I came in with. So say I was with Kaizen pool. I now want to basically restake, even though I've sent some ADA from my wallet to this smart contract. I want to allow that smart contract to basically, take that UTXO and control it in a wallet that's delegated to Kaizen, okay? And point the rewards to the initial user who actually deposited to the protocol. What happens is once that ADA is borrowed out, loaned out from the protocol, who should those rewards go to, right? And that's the issue. And even more of an issue than that is once that happens, and someone's holding those ADA, they've opened a loan in ADA and now they have it, they're earning those rewards, right? When they get either liquidated in their position or if they repay their loan, who should that pointer address now, update towards? And does the Plutus script have the functionality required to update that pointer address upon each of those actions, where essentially the change of ownership in ADA means the user who's receiving that reward through the pointer address scheme in Cardano should change and update. You need to have the ability for the script to constantly do that on the beyond just like a one turn, because that could happen. All those ADAs are basically changing hands on the fly. There's always loans being repaid. There's always ADA that's held, in the protocol that can then be, swapped out if a loan is taken and then, someone sells it on a DEX, for example. So all of these things you have to think about every time the change of ownership happens and a new UTXO is created, but that same ADA is pointed towards the same rewards address, essentially. shouldn't it change? Like when you repay your loan, shouldn't you stop receiving the ADA rewards that you had when you initiated the loan? So these are the things that our devs are trying to think really carefully and deeply about. Essentially, we're having the right conversations with the right people. Okay, we talk to Lars on a daily basis. We talk to Duncan. We're in the Plutus Partners program. Like MLabs devs are very committed to getting this right, not only for Liqwid USD, which is a stablecoin protocol that a different subset of MLabs developers and Liqwid devs are working on. This is going to enable basically a CDP borrowing system for stablecoins, and specifically US dollar, collateralized only by ADA, essentially. But it would be really nice to say, okay, in these collateralized debt positions, similar to Liqwid, your ADA is being staked. You're earning the rewards, and essentially it's actually paying off your open loan in the system because it's adding to your collateral amount. So that would be very nice to have. And like, I mean that, like in software development, we say things like there's critical, there's like very nice to have, and there's just like nice to have. And that's how you kind of prioritize features on a backlog sometimes. Like it's very, very nice to have this feature in the system. It makes us like super ultra competitive. And there's no DeFi protocols today, Ethereum, Solana, you name it, that has this functionality. I guarantee it because I've looked and I've searched. There's protocols that do fractured things like, allowing you to unlock your ETH2 liquidity like Lido or Staffy or these other things. That's not the same as what we're talking about here. We're talking about truly having multiple, the base yield, the base risk-free rate of return in Cardano is from staking. So we're saying including that on top of the actual interest that you'll earn from the borrower interest repaid in the ADA market and combining those yield streams, that is like next level, like it sets you apart. So yeah, we're keen on getting this right, talking to the right people, having those conversations, but it just takes some time. And like I said, there's things that we need to do from a security audit and like actually safety V1 day one standpoint for Liqwid. And those are the things like, the Oracle mechanism, making sure our system for updating that and system for pricing these different assets at different times is correct, system for accruing interest. Like these things are kind of critical to the security. And we're making sure documentation and contracts are optimized and refactored and things work for that specifically. But trust me, on the back burner and like right in the back of their minds there, I promise you they're thinking about this staking feature. We talk about it all the time.
Wow. So yeah, quite a bit of details there. I know I've been getting lots of questions regarding that. So you've cleared up quite a bit there. So I appreciate the very detailed answer. Now, what we're seeing recently with the markets is quite a bit of volatility. With the markets, especially with crypto, it's like up and down, quite the roller coaster ride. So I wanted to learn from you, like, what are some of the things that you guys are thinking about related to the use of the protocol during times when the markets are very volatile? So let's say, for instance, you were to borrow against assets that you've supplied to Liqwid. What type of things have you been thinking about related to parameters set so that you would have like a liquidation? I guess like what would trigger a liquidation, or like how does that work essentially with the oracles as well?
Yeah, great question. So essentially, it's all based on that collateral factor. That's going to actually determine a user's borrow limit in the system. So remember how we said you can be a supplier and a borrower. Once you supply some amount, it basically unlocks your total borrow limit because if it's ADA as collateral, 75% of that amount. If it's some other token, usually 50 to 75%, somewhere in between, right? Maybe if it's a stable coin, around 75 as well. What we're saying is in any system, when I borrow, if I borrow an asset that goes up in value, I've essentially just shorted that asset, right? So in a bull run, we actually want to highly discourage users from opening loans in assets like Cardano ADA, right? Of course, we don't control this, and this is a decentralized protocol. Users are going to do as they please, but like the economics of opening a loan in an asset that was going up in a bull run is going to be against you, at least if it's a long-term loan. What you want to do in those situations in a bull market is incentivize opening loans in stable coins. And I've talked about this often. I think that the mark of a successful money market lending protocol like Liqwid, when you look at the Aves, the compounds, it's always having a liquidity moat of stable coins on their protocol. They've built it out obviously over years. Aave started as ETH Lend way back in the day and became what it is today from, Stani and his team just being, amazing and hacking at it. But to build out just $1 billion liquidity moat, most of it being stablecoin, takes a lot of years building of community trust, just iterations of the protocol and system, right? You can kind of envision how long they've been at it. Essentially, we're trying to do that on day one with right now in Cardano, really no clear path to exactly what that stable coin is going to be and look like. And that's why Liqwid USD was like, this is, we've been thinking about this thing for a while. It's time to enter this race of saying, okay, yes, we're going to have a lending system, but a lending system without a true stable coin to borrow from. And to borrow from it, keep in mind, you've had to have had incentivized the supply of that and a large supply of it to make the actual borrow interest rates attractive to folks who would come along and borrow at a competitive rate, essentially. So to do that, you're saying you need to have a supply and a diverse optional supply, right? So glad to see Charles and IOG are looking into stable coins. I'm glad to see, Ergo is working on a new stablecoin implementation. Hopefully they bring that one and their existing Sigma USD implementation over. I've talked to founders building on Cardano, building the curve of Cardano, so like a stablecoin DEX, and they're also working on their own stablecoin implementation. And LQUSD is also going to be one of those. So it's great because as of the last couple of weeks, I've seen some things emerge that I think will mean the stablecoin options that Cardano users have to choose from in terms of minting, owning, holding will be plenty. And it will be enough for a protocol like Liqwid to be able to have a large supply of them and produce those interest rates that you want to, have just very secure loans on the borrow side at a competitive rate. And I mean secure because you're mitigating the price volatility of the asset. If it's a stable coin, you're saying it's always going to be right around $1. So yeah, that to me is like, that's the play for essentially borrowing in a bull market. Supplying ADA as collateral in a bull market is fine, especially if the price is, staying flat or going up. You're usually good in that situation. Obviously, supplying ADA as collateral in a bear market, even then is usually fine because of ADA's market cap, its volume, the fact that on a risk-adjusted basis, it actually is really competitive with like Bitcoin and Ethereum and isn't too volatile these days. I say that, and then some weeks it kind of shocks me still. But again, it's such a young asset. It still needs so much historical price trading data to kind of get to that point of like evening and thinning out the volatility. So yeah, even in bear markets, you got to be careful, or flat markets sometimes, careful using a token like ADA as collateral. Essentially, it's just like it gets to a point where most users are going to supply one type of stablecoin and borrow another type of stablecoin. And whether they get that through a DEX or some other mechanism, they mint it through that algo stablecoins protocol, it won't matter because Liqwid as a protocol will be generalizable enough to just allow them all to come on and flourish and have their own markets for supplying and borrowing, essentially.
I gotcha. So we're talking a lot about stablecoins, and I think that is one of the most fascinating things about DeFi. One of the words that Charles used in one of his updates was an algorithmically generated stablecoin. So I wanted to learn from you a little bit about why that's important. If we take a look and consider things like Tether, USDT, one of these from Bitfinex, and it's like that has seen quite a bit of controversy as to like the amount of assets that are actually backing the quantity of stablecoins. So as far as being able to create something that's secure in that sense, could you tell us a little bit about that and some of the things that you've been thinking about?
Yeah, absolutely. I mean, we know the tethers are like an existential risk to crypto, and Charles talks about it very well. I recommend anyone to check out that video, that recent AMA where he talks about it. But this is the thing, right? The whole like Eurodollar system that's built around the globe today to allow non-Americans access to US and US denominated debt is like taking off in crypto, right? And it's all built on top of a stable coin that's the US dollar stable coin. To me, this model of DAI, US Terra on Cosmos, there's many different experiments of algo stablecoins now taking off on Ethereum. One of them is going to really dominate. You see Liquidity now, a new protocol. They have 10% of all Ethereum locked in it, have been live for around 2 months on mainnet. And they have a very efficient algorithmic stablecoin model. Essentially, you're saying you can take your volatile crypto and in any market, bull or bear, remain exposed long to that crypto, but also have access to stable USD. They're very much a CDP borrowing system, kind of similar to the MakerDAO model. Some algorithmic stablecoin protocols decide to have a 2-token system where one token is almost inflationary, and the supply can increase or decrease based on the price of the actual stablecoin to kind of offset it. There's arbitrage mechanisms that take over in there as well. I'm not so sold on those, systems as well as I am the kind of MakerDAO systems with a more functional and efficient way to do liquidations. I think that Liqwid has a really nice model for what they've implemented on Ethereum today, and we've talked to their team. In fact, Liqwid USD, I don't think it's a surprise now. Liqwid USD is kind of being built as Cardano's extended UTXO version of the Liqwid protocol. So everything from the efficiency and the way you actually can take out a max collateral of 110%. So you only need to maintain basically a minimal collateral ratio of 110% in this system. In a borrowing protocol like Liqwid, you need a minimal collateral ratio of, even for ADA, of like 133%. And many protocols, like even synthetics, to take out a stablecoin there, you need 750%, 750% to take out, a loan in stablecoin essentially, and to collateralize that with their token. So like, it's very capital efficient in the way that it can actually allow you to max out your leverage. And the reason that it can do that is because of the efficiency in its liquidation system. There's this mechanism called the stability pool, where essentially you incentivize users who have just minted some stablecoin to supply to this, if you will, pool that's actually managing liquidations, and also taking that seeds collateral and using it to kind of repay the users who stake in this pool. It's a form of compounding actually, because although your amount of USD stablecoin that you initially deposit into that pool might be decreasing, every time there's a liquidation event, pro rata, you're earning 10% of that as the liquidation bonus. So you can quickly then claim that liquidation collateral and sell that on a DEX for back into the stablecoin. Now you have 10% more as kind of like a risk-free almost trading strategy. And you're also earning the governance token. I shouldn't say that. There's no governance. It's a system token is what they call it. You're earning the system token in these protocols just by being deposited in that staking pool. So yeah, there's some really elegant solutions to doing stablecoin protocols out there. We have a vision that we're implementing for Liqwid USD. I'm sure the guys working on the Curve DEX-like protocol have their vision. I'm sure IOHK has theirs. So the exciting thing is, like, we're quickly getting to a point where the market's going to decide for us all. It will be Cardano users who say, voting with their wallets, I'm going to back this protocol over this one, and these are the reasons why. And that'll be very much a dynamic process, right? It won't be like, day one protocols, winner take all. We see how these things are even on Ethereum today. Like a protocol like Liqwid came out of the ashes, right? And now they're chilling at like, number 9, number 10 on DeFi Pulse ratings. So they're kind of like, one of the top, if not, in my opinion, the most efficient stablecoin protocol right now on Ethereum. And they've been live for basically only 2.5 months on mainnet. So these type of things can still happen today, even on a blockchain like Ethereum that's had DeFi since really, 2016, 2015. So yeah, I definitely think that Cardano is going to go through a wave of experiments. You still see stablecoin experiments on Ethereum today. You'll see them on Cardano into the future, but there will be a dominant leader. Like at the end of the day, like the market's converged around MakerDAO and DAI, and that's kind of like the system that a lot of DeFi composability is built on top of. I expect the same exact thing to happen in Cardano, whether it's one or two of these stable coins. Probably only going to be one, to be real, but we'll see. It's going to be exciting, and I'm happy that IOHK is actually meaningfully stepping into this race, because to me, it's the base. Like I talk about it so much, and I probably sound boring just talking about stable coins, but like it's actually, to me, what all of DeFi is really built. Like if I consider myself a student of the game for Ethereum DeFi, the one thing I can say is get like stable coins out there early and often. Like MakerDAO essentially kicked off DeFi in 2015 when they launched, V1 of Maker and DAI. Everything else kind of was built and came after that, really. And everything else wasn't as good as it could have been if it had that stable coin in it from day one. But yeah.
I gotcha. So lots of points there. I know there's a lot of competition when it comes to these things, but I completely agree with the points you said. There is going to be some type of market leader in that respect. So I wanted to get your thoughts also on some of the things you mentioned related to governance with Liqwid protocol, and kind of tie into that as well. So you guys actually have a Project Catalyst proposal. So you guys were Fund 2 winners, Fund 2 recipients. So, amazing to see that you guys have been able to keep up with all the progress being very transparent. Just want to say kudos to you and the team as well for, keeping up with all the progress and being very transparent with the community. I think out of all of these different projects that we're seeing now currently coming to Cardano, just expecting with the developments there with Goguen, you guys have really kind of led the way and set a standard in that regard. So kudos to you guys. Could you tell us a little bit about governance with Liqwid and your Project Catalyst proposals?
Yeah, absolutely. Project Catalyst for us has been the main and primary at this point bootstrapping mechanism for us. But even more so, it's been huge for us to outreach and speak to the community directly. Without having to go through any rails. Really, IOHK provides a great platform with both idea scale, with the weekly town halls, the Telegram channels and Discord channels. It really provides this like one-to-one connection with the community in a way that I'm not sure you can even reproduce on just a Cardano forum or a Reddit. And it's not like, those are also great platforms for communication and we use those as well. But wow, idea scale and catalysts and these kind of mechanisms to put your ideas out there, have them judged by everybody, have them critiqued, by everyone who cares to actually take the time to review and analyze these things. And, by the way, there's a ton. I think on the recent shows and slides from Door, there was something like 22,000 people involved in Catalyst.
Yeah, it's huge.
That's a massive, little ecosystem that's building out in Cardano. And essentially one day it might even be the size of current Cardano, over 500,000 or so users active. Like that could be just a decentralized VC in the sky, really. And not only decentralized VC, a decentralized research body, decentralized, R&D and accelerator, hub for just all things Cardano. For Liqwid, it's been very, focused on trying to be a leader in the DeFi space. In Fund 2, we introduced a community challenge, a DeFi focused challenge. And, we voted on some of the other DeFi, other proposals that were in the DApp challenge, DeFi focused swaps and things like that we think can really help improve the entire Cardano ecosystem on day one of Plutus mainnet. But just having the ability to go through Catalyst and say, okay, myself and Rodrigo Pancini, who's a community advisor, runs a stake pool, awesome Cardano community member, and just really brilliant DeFi mind who understands a lot of what's been built on Ethereum and can reimagine some of those things of, what's worked in the experiments of DeFi and what's really hasn't, and what should be actually, replicated on Cardano and what shouldn't be essentially. We sat down and said, hey, let's put together a proposal and let's focus it towards the DeFi community and ecosystem. And now we have all these, brilliant proposals in there in Fund 5, and Liqwid has one for our security audits. It's the last proposal that we'll introduce through Catalyst before we actually launch the system, and hope to have our own DAO and treasury and funding mechanism to sustain our system into the future. But really, it's like saying, wow, there are so many DeFi swaps and even other lending protocols now competing in Cardano that even introducing a challenge through Catalyst like this is now super oversubscribed. There's, all these awesome ideas that are coming out of the woodworks and teams being formed around it. I mean, we even met our chief product lead and myself, just met up through just going back and forth on idea scale. And then, linking up in Discord and saying, hey, you think about a lot of the things that I think about. And, he comes from, 20 years of financial asset management consulting, Swiss banking experience. And to apply that to a protocol like Liqwid is like, there's some real tangible things that we got, out of working together and the models that we built together that, even one of us trying to hack out alone would have taken, significantly more time and effort and energy than both of us being able to come together and say, okay, we both come from these financial backgrounds. I can focus on, more UI, UX and product and making sure the actual experience is seamless and close enough to a compound Aave. You can actually help us verify and simulate all of the financial models, all of the different functions that we're going to have in terms of user endpoints in the system. And we can just basically build this thing together before we even get to the point of development and talking to our dev team. And still to this day, me and Florian, we have calls every day. We talk about how we're going to manage this part of development, how we're handling these things. And, he's really driving a lot of what's happening with Liqwid USD, right? And, we both work in the industry. We're both, in blockchain and tech for our day job. So it's really like, there's so many people kind of with that like-minded tech focus in Cardano and in Catalyst that are just looking for the right project to connect, looking for the right team to kind of merge points. There's also, there's also like a maturity to it that's happening now. You see governance alive, you see the Catalyst circle, some of these other things that are coming up in Catalyst where it feels much more like bottom-led initiatives. Maybe the governance alive is kind of like middle-led. IOHK, I guess, technically hired them, but hopefully, and it's not even hopefully. I've worked with these guys and girls and women in the Catalyst town halls and update weekly, progress calls that we do every 2 weeks. The governance alive people are amazing. They're actually structuring the calls and trying to help us think about how do we collaborate? How do we think about what my project is doing compared to yours, and where we may be able to find synergies, or where we may be able to best apply each of our time and just like capabilities to kind of collectively build out some form of just like a Catalyst consciousness, right? It's saying that, hey, once these rounds are 1 to 10 million each challenge, like not just the round, but each challenge, you need to have some form of like a maturity, a consciousness, a resource for the projects that get funded to come through Catalyst and say, okay, these are what the past, cohorts did. This is all the information that they collected. This is the lessons learned, right? Like Governance Alive is actually trying to like structure a lot of that for us. And it all kind of like starts to me with working with the teams that are currently funded and are currently going through the experiment, and then trying to say, okay, this is what we're going to leave behind and make better for the folks who come after us. I think that the initiative to have like an actual circle and to vote on like a set of leaders for a defined period, and they all come from different backgrounds to kind of represent as a whole the Catalyst community, I think that's amazing. That's only speaking to like the maturing and like the conscious mind that is Catalyst. So yeah, I think it's great. I can't speak enough about it. And honestly, just the fact that like we're able to compete in this thing, and really it's just like it's going to bring out the best ideas in Cardano as a whole. It's going to bring together the best products and bootstrap the best teams. Like, to me, you can't think of a better funding model, and just the numbers alone kind of prove that out. Like when whatever, the DAO radar sites start to accept it as like an official DAO, it will on day one be, the largest decentralized autonomous organization that's out there. So I'm just really excited for when that day comes. We'll see.
For sure. I mean, some of the most exciting things that I'm seeing right now is coming from Idea Scale and Catalyst. So yes, 100%. I'm excited for all the cool things, especially as we move closer towards Goguen. Just the cool ideas that are available out there, and you meet like-minded people, just trying to figure out synergies between people and their projects, and seeing what you guys are doing with Liqwid as well. Just the points that you mentioned. I think it's great as a way to be able to collaborate.
Absolutely. Yeah. And team build too. A lot of if you're an engineer, if you're, not even a software engineer, you're a protocol architect like myself, like you're thinking of like, how do I create an experience that may be similar to a proven business model and a proven product market fit? Maybe it's lending, maybe it's swapping assets. Maybe it's totally something different in the NFT, space of things. Those are all great. And like, there's so much room and work on the front end of building these protocols. And I know because of my day job, all I do is try to build these software apps as, more of the product development person. There's so much work on that end that has to be done before you even get to that stage of, okay, I need some software devs to come along and, hack together some Plutus contracts, right? So like, I would say use Catalyst as a process to take maybe semi or even unformed ideas and build teams, build structure, build concepts around them that are going to take you to that next level and actually like get you like to a funded proposal. I think very much so the plan and the path that Liqwid took, and I recommend, any other team who's doing it for DeFi to kind of take a similar path, right? You can build out your team and the resources that you need to find from actually submitting to something like Catalyst. It puts you in the limelight in a way for the Cardano community to actually analyze you, for independent devs to reach out to you on LinkedIn, on these other platforms. And that's happened, so much for Liqwid, and I'm sure for other protocols as well. So I really encourage, like, everything doesn't have to be perfect. Like, unformed ideas are welcomed in this community. Like, I know that IOHK and we come from this like research first principles background, and I agree, it is true. But this is the application layer now that we're entering, right? This is a different game of iterate and improve. Obviously, make sure that your things are audited and secure and robust. But in terms of iterating on an idea and getting off zero, and having that, initial one moment, like Catalyst can help out a lot of product teams on Cardano that are trying to get there. and trying to find the right both bandwidth internally, concepts and product market fit for what their application will do when live. Catalyst helps you mature quickly in that aspect, mostly because people are critiquing you and telling you that you're trash. But it also forces you to reimagine and rethink everything. And some of the ideas that are brought up there are just beautiful, magical things that you cannot come up with on your own. It takes a collective community and just intelligence from a diverse background to actually, come up with these very fruitful thoughts. So yeah.
Yep, 100%, 100%. And I know you have a bit of a competitive background as well, because you are into sports, just from watching some of your previous chats. So, that friendly camaraderie, but also that friendly competition as well is what is going to bring out the best and brightest from everybody who's proposing ideas.
Absolutely. I mean, I just take the DeFi example because I think to me, it's like the most vicious competitive marketplace there is out there. Like these protocols, like the way that liquidity actually flows through these DeFi systems, like they even termed it like mercenary capital, right? Because like these whales don't actually, they're just here to use the best product and to squeeze out the most yield in the most secure system with the easiest UI they can. They care about liquidity. They care about the operating costs of themselves as a liquidity provider, and they care about the UI UX. That is it. Okay. So if you're Uniswap or now you became SushiSwap and you have better LP returns, oops, see ya. We saw that case study and almost half of Uniswap's liquidity migrated over to SushiSwap because they front ran them into introducing their governance token and whole platform. And Uniswap had no choice but to introduce Uni and come out with the grant system and the whole governance mechanism after that. So there's these like famous case studies in crypto to kind of show you like, yeah, as a competitor and as someone who comes from that background, like there is no market that, in my opinion, seems more competitive and just vicious than the DeFi system. I expect the exact same thing to happen on Cardano just because of the nature of competition, right? And the nature of it breeding the best product for the end user. So competition is great. We love it. There's some other lending protocols coming out in Cardano, and we talk to those teams as well. They talk to us, and we share ideas where it makes sense. We keep other things private where it makes sense, and we hold our IP until we get through that audit and we open source everything. But at the end of the day, we're so early in building on this Cardano blockchain and this extended UTXO Plutus model that I am so much more in the spirit of collaborating than I am really in the spirit of competing, to be honest. Like that's just really coming from like me as a protocol architect, thinking about building a DeFi system that's composable, that can interoperate with other protocols on Cardano for doing swapping, for building higher level systems, for hedging interest rates and tranching different yields. There's all these things that you can build in terms of secondary product offerings, and other teams will come along and build these natively into their protocol. Other third-party app devs will come along and build these things on top of Liqwid and other protocols. So I'm much more like, thinking of, in these early days, how do we build a system that's generalizable enough to be maintained at the base layer of Cardano DeFi, but also composable enough, also has a collaborative spirit and community behind it enough to be able to reach out to some of these other protocols and say, hey, should we interoperate? Should we talk? I think I saw the other day a really interesting proposal. It might have been on Aave's forum. I think it was to introduce the comp governance token, or it might have been the other way on Comp's forum to introduce the Aave governance token. One of those, but it's like, okay, essentially you have your two biggest money market protocols in Ethereum, and now they're having the real conversation of should they integrate the competitor's token as one that can be supplied, earn yield, and borrowed, right? And that's like a really cool, like, it takes a community that's matured to a point and has reached a certain product market fit and differentiated itself and its service even from others in the same exact vertical of product that they're competing in, to be able to kind of do that. And interested to see how that turns out, or how that turned out. But yeah, examples like that are kind of, to me, if that's happening on Ethereum, 5 years into the DeFi experiment, Cardano and the early DeFi, protocols that are certainly competing, we're all competing to lock ADA and lock value, but we should be so much more collaborating and trying to compose and build different products that combine our different systems together to make something that's beautiful. I'm a big Gestalt guy, right? So the sum is always more whole than the sum of its parts. So you have to kind of always be thinking about that, especially in the composability frame of DeFi and these type of products that are emerging. But yeah.
No, I completely resonate with that. I think it fits into the ethos of the Cardano project, really, just being able to talk with other communities and, interoperate and collaborate. So I completely resonate with what you're saying there. Now, I wanted to change gears just a little bit. So we talked about quite a bit related to catalysts and voting, but I wanted to go back and touch on the LQ token, and you mentioned the Q token as well. So as far as when Liqwid is available, so I guess it's going to be when we do see Goguen first rolled out on the mainnet, what is going to be the user experience for actually getting hold of LQ tokens and being able to interact with the protocol?
Yeah, absolutely. Great question. So we just are actually working on the UI UX for this in the app right now. It's being developed out. It's very clean and kind of similar to almost the Uniswap example of supplying liquidity, if you've ever done that on a protocol like Uniswap. But essentially what it means is you come to a protocol like Liqwid or a protocol like Uniswap, you supply some liquidity to the system. In Liqwid, you supply ADA, you supply your AGIX, you mint some Q tokens. There's a staking contract that's built into the protocol to only distribute LQ to the users who stake their Q tokens in the system. So essentially it's users who have supplied some amount and aren't locking that right now to open a loan can take those Q tokens that are currently in their wallet in the same transaction they supply, they'll be receiving Q tokens in their wallet that they can then stake in the protocol. Every epoch, 5 to 7 days in our system, we haven't exactly nailed down what the timing will be. But every epoch, essentially, some LQ will be airdropped on each of these different Q token staking pools. So the Q ADA staking pool, the Q AGIX staking pool, the Q stablecoin staking pool, and so forth, right? And that amount of LQ that's actually airdropped or dripped onto each of these pools or markets rather is dependent upon the borrower interest repaid in that market or the borrower interest that's accrued to that market for the last epoch. So if I'm in the stablecoin market, for example, and there is 2x the amount of borrower interest being repaid or accrued in my market for a given epoch compared to say AGIX or maybe even ADA, right, or some other market, all things else held equal, I'm going to be earning, and all the other Q token stakers in that Q stable staking pool are going to be earning 2x the LQ rewards each epoch than a user who's in that Q ADA or Q AGIX staking pool. And there's a configurable parameter in that and how we do the actual LQ distribution. And there's a multiplier on that formula. So the ability to tune it up or down will all be controlled by the actual governance and LQ voting again. So in this system, all of the smart contracts have parameters tied to them. And each of these parameters are configurable through voting, essentially. And the distribution of LQ is actually no different. And the reason that you'd want this is, one, if you were trying to incentivize the supplying of a new market, say maybe there's a new stablecoin and it's just launched on mainnet and we want to actually incentivize more users to start supplying that to Liqwid, we can actually up or vote to up the actual multiplier on that stablecoin Q token staking pool compared to all the other staking pools, essentially, so that even the same amount of borrower interest accrued or repaid to that market will result in more LQ being dripped or airdropped onto those stakers, simply because the multiplier on the algorithm that's controlling the LQ distribution was configured to be higher to directly incentivize that supply. So things like that, you can incentivize, you can disincentivize supply if you see things like wash borrowing happening. That shouldn't occur in our system the way we saw it happening with Compound, like liquidity mining, when we saw like basically a lot of users borrowing like basic attention token and ZRX, just to be able to drive up the borrower interest that's being repaid and then earn the comp. That won't happen in our system, mostly because of the fact that it's all based on how much borrower interest is being repaid, and we can configure the collateral ratios and the collateral factors essentially so that those tokens have much lower borrowing power than an ADA or a stablecoin would from day one. Okay, so Compound decided to allow these tokens to all have the same borrowing power, and that's why users were able to kind of take some of these illiquid tokens and run up the amount of borrower APY, the borrower interest being repaid to the system, so that they could basically farm out the comp token. We are saying in our system, it's all based on the amount of borrower interest that's being repaid. But for those illiquid tokens, to prevent against that wash borrowing event from happening, we're essentially going to tune the collateral factor to minimize the amount that you can borrow compared to if you were to collateralize a loan with something like ADA instead, or a stable coin instead, where it's much harder to wash borrow that and have all the supply, so concentrated in small amount of users' hands. But yeah, there's also a lot of things I kind of have hit on some of them in terms of the borrowing ML algorithm that we're working on. That's a little early and still kind of in the skunk works, but a really cool mechanism for being able to distribute and at the same time incentivize healthy credit scores and healthy just loan statuses in the system, because those users will be earning the most LQ per rata because of the fact that they have the healthiest position. So yeah, that is something that we're very keen on getting right before mainnet as well. And that will basically be the other side. So Q token staking is only for suppliers, right? Because the idea is if I'm locking my Q tokens as collateral to take out a loan, I obviously can't have them both locked in the borrow contract UTXO and in the actual Q token staking pool for that market. So I have to decide which one I want to actually use. Do I want to earn LQ as a supplier and just earn my normal yield? Or do I want to lock my Q tokens in the borrow contract as collateral and then borrow some asset, right? So yeah, these are the things that we're working on, daily in terms of the contracts, the actual borrow lending, the actual supplying, withdrawing. These contracts are mostly completed, and we're now more focused on the actual governance side of things. So the distribution of LQ, the formula and the algorithm that's controlling that distribution across each of these Q token staking pools. These are the things that we're in combination with the Oracle mechanism, the liquidation mechanism, really focused on getting right and optimizing right now. So yeah.
Wow. Okay. So I guess it's going to really be determined on how you're using the protocol, like in what sense are you interacting with it? So, and you guys are thinking a lot about many different things. So excited to see your progress there. One thing that you had touched on, so kind of changing gears a little bit and touching on some things related to digital identity. So co-founder of Liqwid Protocol is actually Joshua Akpan, and I'm so glad to have had the opportunity to speak with him as well. So he's actually from Nigeria. And one of the things that excites me most about what we're going to see with DeFi is not only, somebody like myself, I live in the United States, the developed parts of the world, being able to kind of eliminate the middleman, so to speak, and have access to credit and whatnot, but also using services and solutions like Atala Prism, which you had mentioned earlier was in Ethiopia, supplying credentials to 5 million students. So let's talk a little bit about some of the use cases for DeFi in some of these developing parts of the world.
Yeah, absolutely. I mean, it's huge, right? This whole thing that I hit on earlier of like that user who wants to secure their first loan in places that have weak identity systems. It's just really hard to do. It's really hard to attest to just owning your identity, much less saying, okay, these are the data points that I've gathered in the world. Like, this is my credit score and this is my, credentials as a student or as a professional. So Atala Prism is saying like, hey, we can have a decentralized passport all on chain, all built according to the, the W3 standards for doing decentralized identifiers, DIDs, and verifiable credentials, right? These things are like, first of all, non-trivial to build into an application that you can just download on your phone. Like there's a lot of like complex, ideas and kind of processes built into the back end of how you can actually issue these verifiable credentials, how you can actually create a DID and register that thing on chain. Like these type of things are being abstracted away in an application like Atala Prism to make, from the end user perspective, a very simple, seamless UI UX as a good product should. But basically what's actually happening on the back end is I can use an Atala Prism application to not only secure, my government attesting to my identity and my social security number or some information like that, to actually use the transaction ID from the borrow, history that I create in Liqwid or another lending protocol like it, and actually store that in my Atala Prism, and maybe even within a credit module, use some algorithm from a third party, a company like Tala who works on these type of things in terms of taking data points from a user's mobile device and outputting a credit score and then a credit line based on that, usually weighting most of those data points towards their previous financial repayment history within the Tala application itself. So imagine extrapolating that to the DeFi standpoint where you're saying, okay, now we have, these AI kind of credit scoring modules within Atala Prism that allow me to take all of my Cardano borrow lending history, input that into my Atala Prism app, the same, wallet app that I have on my phone, and essentially output a credit score. I own that credit score now. I could mint an NFT of that credit score. Some of these protocols probably will allow you to mint an NFT of it. And it'll be kind of just like every time you update your FICO score, right? You see, oh, you have a new FICO score and in your wallet, you've just minted a new NFT representing your most recent, credit score within this Atala Prism credit module or financial module. Now, what you can say in DeFi protocols is, wow, a DeFi system that has identity and credit can do some really, really fancy things. Like fixed income is basically built off the idea that you need to assess the risk of the borrower. So that's, what credit is used for, and actually have identity into all the different participants in that contract, right? So you can reproduce fixed yield and fixed income contracts. And that's like a very large market cap in just global assets, really. And that doesn't really happen until you get identity and then the birth of credit on top of it built into these systems. Like Liqwid is doing a very simple thing, right? We're saying we can produce floating interest rates based on supply and demand. Like at the end of the day, like that's what a liquid money market does. But fixed income and the mechanisms needed to kind of structure and produce that are much more complex and concrete in terms of the regulation and the compliance that's built into having secure identity mechanisms and systems, having secure ways to do credit scoring and systems. You talk about Nigeria, you talk about Port Harcourt and the places where Josh is from. I remember the first days of Liqwid, I'm writing the ideas of Liqwid down on a Philadelphia business journal, right? Josh is, replaying to me what his experience as a Nigerian user, just securing his first loan on his app, or, supplying some amount that he wants to lend out and earn interest on, what that experience is actually like. There still is no credit scoring mechanism. Like, yes, there is an identity system and there's a social security like number that's tied to these users, right? And allows them to actually access some of these Web2 borrowing and lending apps. But there's no mechanism to take that data that they've generated and produce meaningful scores that allow them to then create better terms in their next contract for lending or borrowing, right? And that's essentially what a credit score does for you. And we can rebuild these things on chain in a way that's immutable, in a way that has data that's attested to and owned, with privacy as well, right? Like we always forget, like people think with identity, you're giving up everything. But really Atala Prism has ZK proofs that are built into the system, meaning I can attest to a piece of information and maintain complete privacy of who I am, the other metadata and context around that piece of information, and just actually attach a proof that allows the end user who's receiving that information to have, verifiable and cryptographically secure mechanism to know that, yes, I only received that piece of information from Dewayne, for example, right? So that's what a ZK proof embedded into an identity system gives you. And Atala Prism as a product just kind of bundles these things into one app for a user. Really interested to see what they do with the SDK side of this. I think that there's been talks about open sourcing it. I think that needs to happen, sooner rather than later. But I honestly think that the difficulty of a government or any public organization, or even any private organization, picking up Atala Prism and being able to use it to issue verifiable credentials, to build out their own modules. Like if I didn't want to have to talk to IOHK, for example, and I just wanted to integrate my existing, Web2 AI credit scoring app into Atala Prism, what would that process be like, right? So I think that is kind of where the almost like commercialization of the Atala Prism product is going to happen. And you see IOHK trying to do some things on their end. We reach out to them often when we see synergies with other companies in the existing marketplace, who have products that could fit really nicely into Atala Prism. And we try to form those relationships as often as we can, right? Even if they're not going to, benefit Liqwid V1, or there's something, maybe a future implementation of Liqwid can see some gain from. To us, it's huge to have those things in the Cardano ecosystem earlier now, rather than later when everything's perfected and ready to go. Because it means that you can start producing that data now, right? In Atala Prism now. Like you can start having those modules that actually score past borrow and past, even, loan transaction and lending transaction data now, and accumulating that as a user is huge, because it says in 2 years, you didn't have to wait for those things to be perfected and come out, when they were ready. You were able to access them from day one. Now, 2 years later, look at how much information you've accumulated. Now you have users from Nigeria and West Africa who have on average credit scores that are higher than borrowers in the West. And that's like a reality that we're going to face in the next couple of decades because of systems like this being deployed on public blockchains, where that data becomes immutable and the identity system tied to it allow ownership and access and attestation. Like those things, like I could go on for all day, because like to me, like Ethereum has done some beautiful things, and it was like the JavaScript moment, and I love it. And I think that a lot of respect for what those guys have done. But Cardano and IOHK specifically, the plan to actually always from day one have economic agency for their end users. Like that was Charles's like, harping moment from that first whiteboard video on. And you cannot do that if everyone is a 0x address. If everyone's just an address, 1, 2, 3, you can't do that type of system, right? And it's too easy for anyone to spin up a new address. It's too easy for anyone to evade the type of ownership that comes with having an identity tied to every single transaction you produce in the system. So yeah, I definitely think that having Atala Prism and having it emerge the way it has is going to be something that's a really powerful catalyst for the entire community. It's something that Liqwid is actively and aggressively trying to leverage as early and often as possible as we can. We have conversations with the Prism team. I think really highly of Dr. Dinal Patel. I think he's come out with a really interesting model for how he wants to actually commercialize this product and have it implemented so that everyday users can essentially take the SDK and build some things with it without actually having to talk to IOHK. And they also have a program for like existing companies who want to work directly with IOHK or even have IOHK's product team and professional services team build out an application within Prism for them. So yeah, there's a lot of collaboration happening there in the back end. Just really can't wait to see it all get open source.
Yeah, most definitely. One of the things that I see that I'm most excited about the implementation of Atala Prism in places like Ethiopia is when you think about lending and borrowing and all this kind of stuff. Traditionally, I mean, at least in the Western part of the world, you have a lot of the questions come about as it comes to regulation. So solutions like Atala Prism may be making it easier to have some type of framework or some type of regulation in that regard on things like borrowing, lending, using Liqwid protocol. How does somebody apply for a loan? I think just having an immutable way to have identity, it's really going to help in that regard as it comes to regulation. And, to the point that you made also, we'll see people in Africa come out with higher credit scores than what you see here in the Western part of the world because of that. So just curious to know your thoughts on some of those things, like what are some of the stances that you have towards regulation? Do you feel like it's something where because of solutions like Atala Prism, we're going to have that much easier of a time knowing where some of these legislations stand on things like that? What are some of the things that you've been thinking about with legislation?
Yeah, I mean, I think crypto has always been kind of one big regulatory arbitrage opportunity for, first generation with Bitcoin, just evade capital controls, push capital from, one location anywhere else in the world on instant, right? With Ethereum, you're taking to the next level with actual programs being run and you're saying, okay, escrow, settlement, actually custody of these funds, all automated, all according to the terms and logic and conditions of the smart contract, right? So you're now taking regulatory arbitrage to the next, exponential level, essentially order of magnitude, really. And now you're saying, okay, let's do this for now saying identity tied into that system. And all of a sudden it becomes, is Cardano even taking regulatory arbitrage to the next level? Or is it giving just the option for you to be regulatory neutral? I have an Atala Prism app. I use it whenever I create a DeFi transaction. And actually, can you do it in a way where there's economic incentive to be regulatory neutral and to be, reporting this data to your government? Like, can you airdrop some token to a user who decides to only use, or can you create better terms for your users who decide to only use a DeFi protocol for borrowing or lending once they have their government issued and connected and verified Atala Prism account, right? Those are the type of things that I think about. I think on the front of it all, the KYC and AML perspective, like you said, it gets a lot streamlined when you have something like Atala Prism. The role of the government and the overhead of compliance and regulation units becomes a lot slimmer when you say that, hey, we have some software and some code here that can automate a lot of the things that you guys are trying to do right now for your users who are using Ethereum and other blockchain apps, but they're just 0x addresses, right? So we can actually help governments and actually probably be like a side of relief for governments today because their users are going to be onboarded via Atala Prism rather than just onboarded via a 0x, MetaMask address, essentially. So that's the difference between, I think, on the front of it all, the KYC AML being streamlined from and the cost saving and time saving involved for any government agency who's onboarding Atala Prism. There's a huge win to be had there. And I work in public sector consulting, for my day job. These organizations think about time savings and resource savings, right? And like, these are the things like, how much money is this implementation going to save me? They don't care if it's blockchain. They don't care if it's on a Mongo database, right? It doesn't matter to them, right? What actually matters is like, how is this impacting my workflow? How much money and time is this saving me? Do I not have to fire as many people each year? Okay, good, let's do this, right? So that's kind of, to me, what I see Atala Prism having a major impact on the forefront of things. On the back end, like I said, like you have to find a way to incentivize users, because Cardano is going to be this public neutral blockchain, right? It's all opt-in at the end of the day. I can use Atala Prism or I cannot. I'm still going to be able to access Liqwid and all the other DeFi protocols if I don't use Atala Prism. So what are my true incentives as an end user at the end of the day to actually create this account and to actually, verify this information? For me personally, it's understanding the value of your data. Once more users actually get that, and again, it's hard to do that when you're just an Ethereum MetaMask 0x address and you got like 10 of them all over the place. But when you have one Atala Prism wallet and account that's registered to just you as a single human that your government has verified, this is your passport, this is your address, your job has verified, this is your professional status, you got your community college credits and everything included in that same exact system. It's much harder to then say, okay, or it's much simpler really to say, I'm going to allow my information to all be collected here, than it is to say, okay, I'm going to create a bunch of different addresses to interact with all these protocols, because you don't need to do that anymore. You can use the information that you're collecting in that Atala Prism account to do higher order things that today, just spinning up 10 different MetaMask accounts and like, hoping that you get the airdrop in the future, like it will outweigh that by so much more. The actual applications from like, from a data mining and from an actual data sharing perspective will be. So I just think it's actually understanding from an end user the value in your data, and you'll know it because there will be data marketplaces built to sell it, right? And there'll be places where you can take your Atala Prism controlled and owned data and using ZK proofs only sell small snippets and pieces of it. As soon as you have that, the actual monetization of your data, it's game over, right? Everyone gets it. It's like, oh, there's money tied to this thing called my data that I'm producing myself every time I use Liqwid, every time I use the swap on Cardano, right? So that to me is like the end all be all for why the incentives will play out for more users to opt into the actual government verified Atala Prism and actually owning and co-locating all their data that they're producing on chain in this layer 2 app. That to me is why that's going to be, that the incentives will drive users to do that over just spinning up a bunch of accounts, creating very meaningful data on the blockchain, but never being able to own it, never being able to use it, to mine it, to produce like higher level applications, sell it, things that like a whole data economy essentially are built on top of. Like right now we're talking about a DeFi economy, we're talking about financial products and services, right? But there's a data economy that gets built on top of that. And huge data marketplaces where ad providers sell and buy your information every single day. And like you're saying, with the birth of something like Atala Prism, as far as your financial data and maybe even your social data, maybe even your NFT data, it can go as far as you can really imagine in terms of these are the transactions I produce in the blockchain. I now own these transactions, the content, the metadata, everything that's linked to these transactions in the marketplaces that I use them on. So yeah, I think Atala Prism is going to be powerful. I think the Ocean protocol is like a data exchange out there. I'm not sure what blockchain it's on, but I feel like I've spoken to the founder a few times on Twitter and seems like an interesting guy. And those are the type of protocols and systems that I think would actually make their way to Cardano, and specifically built on top of Atala Prism, that would service a huge, upcoming data economy that's inevitable in Cardano, right? Where it's all going to be stored is a great question that I do not know. Probably some AWS, cloud server, but that's fine, because at the end of the day, you still have the transaction hash, right? You still have the transaction ID. That's all on chain, right? It's like you don't have to actually import and upload all this data to the blockchain. We won't, right? We'll use layer 2 and off-chain mechanisms to store it there somehow, and just take the hash of the actual transaction and actually allow that user to own it in their Atala Prism ID, right? So yeah, it's a really cool kind of like data sharing, data owning future economy that I think is going to be like, that's when like Web 2 is like in full steam and going. It's had its Wi-Fi moment. All these blockchains talk to each other. It doesn't matter what blockchain my data marketplace is based on top of. I have this layer 2 DID called Atala Prism. It talks to all of them, kind of like in a LastPass type of sign-on type of deal. So these are the type of things that we're going to get to. They're going to be built on Cardano first. But eventually when it's like so, just like the market is so saturated that you have that interoperability across blockchains, you'll be able to sell your Cardano generated on-chain information to a data marketplace built on Solana, on Binance Smart Chain. And it won't matter. For the end user, you won't even probably know and realize, because it'll all be so aggregated and it'll all be so kind of secondary product offering away that it won't even matter to you. So that's to me the end all be all. That all starts with having a place to own and to verify and to attest that data like now. And Atala Prism is that solution. So yeah.
Wow. Wow. So many great points you mentioned. I didn't even think about it like that, but it makes a lot of sense now that you say it like that. If you think about just using a website like, you go search engine like Google or Yahoo to think about the data that's on these platforms. If you go on social media and having a way to, own that data and then monetize it, it's a lot of cool points that you mentioned there.
Yeah.
So exciting.
It's a lot to think about. Yeah. I've had this kind of conversation with some folks like Nico before, and he's always tells me like, Dewayne, just focus on V1, like focus on your main product, because you have all these ideas and they're all great and grand, but you have to, and he's right. So much of this at the end of the day, like it's all about like, okay, there's this huge vision. And once you get this main module on chain, just borrowing and lending, essentially, you can build so much around this thing with governance and with product integrations like Prism on top of that. But yeah, it really is just a key kind of like almost tunnel vision focus on what are the core functionality. Like the system could not operate without these features. That's what, our devs, that's what our backlog, that's what our current software requirements are being built out. And the contracts that we're, implementing on, those are what's actually the focus today. Tomorrow and into the future, the Atala Prisms, the data sharing apps and the modules built into Atala Prism that allow you to take out loans from Liqwid and sell your Liqwid data somewhere else. Like those things will come in time. And, I'm going to be in this Cardano ecosystem for a long time. I'm a young guy. We got grant funds, we're going to be here building things until we run out of money. And that's going to be a long time from now, right? So we're really excited to just really focus on building out our V1 system the way it needs to be constructed. But then in the future saying, hey, now that we have this thing on chain, it's actually, a very straightforward process to now iterate, to now innovate on top of that model.
I gotcha. Yeah. So many exciting things coming up. But like you said, just keeping that tunnel vision, keeping focused, eye on the prize. So, DC, we talked about so many amazing topics. I learned a lot from our conversation. I guess to wrap things up a little bit, as far as what you guys are looking forward to coming up very soon. So, talking about Goguen coming up hopefully by September. So what are some goals that you guys have as we move closer towards that time?
Yeah, absolutely. The first goal is just first getting out to testnet, right? And that's going to happen at some point in July. Like I said, Alonzo White 2.0, Alonzo Purple is kind of that stage where we think that the testnet will have the functionality we need to deploy all the contracts that we built to date onto that public testnet for users to connect their Cardano wallets to on testnet and be able to interact with and simulate what those contracts will look like on mainnet. Now, after that, and kind of that's an iterative process to mainnet. So we deploy to testnet. Each couple of weeks, we release a new version of an existing contract that's been optimized or refactored. We release a new contract, new module on top of governance, things like that. At the end of that July, kind of early to mid-August process is entering the security audit. And that's kind of like the second big milestone that we're approaching now. We're in active conversations with Tweeg. We've been having code advisory review sessions with well-typed for some time now. Basically to get us ready for that moment of entering the security audit, both from like a protocol security standpoint, also from a documentation standpoint, which is huge, like having all the technical docs needed for a thorough and just like detailed, audit is huge. And Tweeg is great. They're really just Plutus experts when it comes to, Manuel Chakravarty and his knowledge of the system and being just the lead Plutus architect from day one, really building out the platform and the different components that make up Plutus. So really his team has a very strong understanding of, the different places that one might go wrong, whether it's in the validator script or whether it's something you're doing with the redeemer values or things like that, their team are just like going to be the most senior Haskell engineers who could possibly look for these type of exploits in the system. So we're really excited to be working with them, and the devs are on board, preparing all the documentation that's required for that. But yeah, that's really the second major milestone. The third is really just getting from that audit and the cleanup and the technical debt that might come out of that, and that the process from now to then, and saying we're getting onto mainnet when that Plutus, is when that Plutus mainnet button is pushed and that hard fork event occurs. We want to be on that same day able to deploy our system to mainnet. There's a lot that comes with that. There's an infrastructure side of figuring out wallet solutions that has to happen still. We hear some things happening in terms of the Yoroi and the Daedalus web browser connection abilities, which are promising, and very optimistic that those things will kind of naturally sort themselves out. But those are the type of things from an infrastructure standpoint, making sure that the API connections that we have to Binance and Coinbase and some other exchanges for taking the price of ADA and other assets are working perfectly. And those are things that we'll test on testnet, obviously, and enter into the audit. But having all of those things kind of nice and ready to go and packaged up for that day one launch, like those are all the things that I think about from an infrastructure standpoint that aren't so much the smart contracts or the actual protocol, but the things that it's interacting with, right? Like the environment that it's going to be active within and users are going to be engaging it with from. So these are the type of things that are going to be shifted towards as we get through that security audit standpoint. So yeah, it's testnet, it's security audit, and then it's getting ready for mainnet deployment.
Wow. Amazing to see your progress. It's just like, it's going to be surreal when it's finally at that point where you can just say, hey, we're live. It's
absolutely.
Oh man.
And I want to say for anyone watching this, there will be so much documentation built out from now until then. I mean, even just from the developer docs and the technical documentation, and a lot of that has already been built out in our Confluence and our internal kind of document hold. But the thing is, a lot of that is focused on the audit itself, and a lot of that technical documentation is kind of specific to the implementation of the protocol that the auditors need to review and kind of test and simulate. All of the developer docs, all of the end user guides, the LE5s, and the content that we'll produce essentially from that documentation will flow once we actually finalize that high level security technical documentation that's going to enter the audit. So yeah, just hold on. I know it's asking a lot to be patient. I explained this complicated lending borrowing system and folks are like, all right, where are the docs, where are the things? But the thing is, like, we're still very much so in a dynamic state with the implementation of Plutus. So even some of the things that we're building in terms of like how our contracts function and how we explain that to developers, we just want to make sure that we're creating docs based on the protocol in its most final state. Once it's entered the audit, once we have a secure, we got the green light on the audit, that's when a lot of those documentation and dev tools and resources will flow, especially for the SDK and that system. Those docs are already being built out right now as a part of our Fund 3 grant. So yeah, I just want to always hit on the documentation side of things. I get a lot of questions on that, so it's coming, promise.
Yep, absolutely. And one thing also is, as we move closer towards this time, it would be great to keep up with your progress. If there's ever anything that you wanted to speak to the community about, it would be an absolute honor and a pleasure to have you on the channel again, just to leave that open line of communication and, hopefully just providing as much transparency as possible to the community.
Absolutely. Would love that.
Yep. So DC, we talked about a lot. I learned a lot. I wanted to say thank you so much for taking the time. Before we sign off for today, I had just a really off-topic question, just hopefully something that, will just kind of leave us off on a good note. You meet and you speak to a lot of people on a regular basis. Almost every day you're meeting somebody new. So I wanted to ask you if you could shake hands and meet anybody, whether they're either alive today or whether they since passed, who would that be?
Yeah, that's a great question. I think I'd probably say Barack Obama. I think, what he's done for this country in terms of being not only the first Black president, but just being able to take over in a time when America seemed like the divide was, as big or if not larger than it is now. The economy was in ruins coming out of the Bush eras, like these type of things that he really doesn't get enough credit for restoring both the economy and just the social status and quo of America at that time. Like, I think that a person like Barack Obama is the epitome of what it means to be a true leader, a true, just great American. So yeah, it'd be awesome to meet him one day. KAIZN, just wanted to say thanks for having me on, man. This was great. Look forward to coming back on again, and truly it was an honor. So thank you.
I really enjoyed it, man. Anytime. It was an absolute pleasure. All right, DC. Thanks so much, man. Take care.
Take care.